Hi all, this is Steve Murray, the market chartist on behalf of Forextraders.com. And we're now going to look at both the US dollar versus the Canadian dollar and also the New Zealand dollar versus the US dollar, and seeing still this underlying US dollar strength versus both these currencies since the FOMC Fed decision and statement back on Thursday of last week. We see upside pressures here for US dollar, Canadian dollar, despite the setback. This strong recovery, a rejection, a hammer pattern here on the candlestick. We'll zoom in actually and see that better. This hammer pattern from Friday, and also similar to the rejection on the downside on Thursday, leaving upside pressures intact from this longer term bull trend and the acceleration higher from May. The market been consolidating since August, but this downside rejection now favours a test up to 133.53 and back to that longer term target up here at 134.54, a long term retracement target here on the monthly chart. If we go across the New Zealand dollar, similar price action. Obviously the chart round the other way with the New Zealand dollar versus US dollar. The market rejecting both on Thursday and Friday upside, coming back from 64.57 from ahead of this breakdown area of previous lows, 64, 65, 85 and 96. Rejecting upside in here, leaving a bias lower in here, a shooting star pattern here on Friday, leaving the bias lower back to 62.40, the recent setback low from September, and then potentially this spike low from August during the equity market sell-offs down at 61.95. Bigger picture, that also sits with our targets down here, monthly targets from 2009 on the long-term chart for late September down at 61.96 to 61.54. This has been Steve Murray, the market chartist on behalf of Forextraders.com, and I wish you a great trading week.